No one in the share market wants to hear this, but I do think we're going to see a general slowdown in earnings growth in Australia. Look, the fact is the big banks have had a stellar run, but I don't see it continuing for too much longer. Credit growth is getting constrained. People are getting used to low interest rates, and there's really not much further to go on that. The mining companies, of course, really held hostage to commodity prices, and one of the most important, iron ore, has taken a bit of a downward step in recent times. So the stellar run of profit increases, I think, will slow soon on the Australian market. There's no doubt on fundamentals the Australian dollar is overvalued, and for me the turning point will be when American interest rates start to trend up in a serious fashion, and of course that is linked to the ending of money printing in the US. Having said that, in the Asian part of the globe, Australia looks like a really good bet. You know, we are seen as part of Asia, our currency is a proxy for Asia. Asia is still where a lot of the world's economic growth is occurring. So these are the two sort of competing forces. If the dollar, as we predict, does come down, you'll see stocks like CSL, Amcor, anything with overseas earnings take an upward step, I would have thought, because really if you're reporting in $8 and the $8 is going down, it's fantastic for our exporters. Well, the big banks benefit from house prices going up because it just means that their balance sheets are a lot more solid. Remember, the banks have enormous exposure, particularly the Commonwealth Bank, to domestic house prices. However, at the end of the day, the banks want to get new customers in through the door. New customers tend to be first home buyers, and at the moment I think first home buyers could be forgiven for thinking that it's just going to be impossible for them to ever buy a house. So it's a bit of a two-edged sword. Yes, good for the bank's balance sheet and the quality of their loans, but bad for the generation of new customers. Having said that, I don't see house prices coming off the boil anytime soon. Look, China is slowing down, but I mean, even if China's economy slows, as it has, from around 8 to 9% growth per annum down to 6 to 7% on an economy the size of China is still a fantastic level of growth. One of the big issues with commodity prices, and in particular iron ore, is not just Chinese growth, but the supply response. And the number and volume of iron ore exporters has gone up dramatically in the past few years. BHP and Rio are the best positioned to take advantage of this. As the iron ore price comes off, a lot of the more marginal producers will simply drop out of the market because it'll be unprofitable for them. BHP and Rio's cost of production is so much lower, they can still make money even if the iron ore price were to fall 10, 20, 30% more. Well, if you looked at the share market, you'd think there were no geopolitical tensions whatsoever. Frankly, the shooting down of MH17, the increase in hostilities between Israel and the Palestinians in Gaza has had very little impact on the stock market. The reason, though, is this: none of the really big countries are directly getting involved. Now, if Russia were to be drawn in, if America were to be drawn in, that would be a different story. At the moment, it's not really affecting the oil price. It's not dragging in the world's biggest powers. As a result, unless you're actually there on the ground, it's nothing too much to worry about. Markets often get complacent. You know, they just cruise along and cruise along and cruise along, and then suddenly something comes at them and you think, oh my God, why didn't we know about that? Recent times have been really good. You know, the stock market's been trading in a band, but generally with a slight upward direction. Look, eventually we all know, history tells us something will come out of the blue, but some of the violent but relatively contained tensions that we have at the moment are not the sort of thing that will derail markets. As I said, if it's the Middle East, you've got to see the price of oil going up. That's just not happening. Well, the last few years we had a much lower than average level of takeover activity, and just recently, in the past 6 to 12 months, it has really picked up. It doesn't surprise me at all. You've got near record low interest rates, so debt funding is cheap. Stock markets have been pretty strong, so equity funding is also relatively cheap. And also, if I'm right and earnings growth continues to slow down, as it has been in Australia, well then companies will look to buy other companies to improve their earnings rather than try and generate them organically. So yes, I think we'll see more takeover activity. Now, if the Australian dollar goes down, that'll make it easier for overseas companies to finance Australian takeovers, so that's something we would look forward to. But also I think domestic takeovers will occur. There's still a lot of industries, for example, the financial planning industry, where they're quite fragmented and you could see things coming together. Another big area of interest is, of course, the media industry. The government is still having a look at how it might change the media ownership laws and structures in Australia, and when indeed they do change, as I expect they will, you'll see some takeover activity. So you might see free-to-air TV companies merging with newspapers or with radio stations, things at the moment which are actually banned but soon might become legal. Look, I think the thirst for yield is what has kept the Australian market going. Look at the banks, look at Telstra, which is at a 9-year high. People are buying these stocks because of the dividends more so than anything else. Look, while Australian interest rates remain so low, that thirst for yield isn't going to go away. And in fact, even if earnings slow down in Australia, I think companies will do whatever they can to increase their dividends because they know that's the reason people want to buy their stocks. Now, eventually, of course, dividends can't always outpace earnings, but I think that good dividend yields will continue to be supplied and continue to be sought in the Australian market.